Ladies and gentlemen, good day and welcome to Q4 and FY'25 earnings conference call of Patel Engineering Limited, hosted by Share India Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harsh Patel from Share India. Thank you, and over to you, sir.
Thank you. Good evening, everyone. On behalf of Share India Securities, I would like to welcome all the participants for Q4 FY'25 earnings conference call of Patel Engineering Limited. We are pleased to have with us management team represented by Managing Director Ms. Kavita Shirvaikar and Chief Financial Officer Mr. Rahul Agarwal. We will have the opening remarks from the management, followed by a Q&A session. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone. Thank you for joining our Q4 FY'25 earnings call. It's a pleasure to speak with you all here today. We have uploaded the presentation summarizing the company's performance for Q4 FY'25 along with the results on the stock exchange for your convenience. I hope you all have had the opportunity to review the same. I shall provide updates on both our company's performance for the last quarter and the financial year FY'25 and the future outlook considering the recent ongoing initiatives taken by the government. Let me start with taking you through the operational highlights for this year. First, I am happy to inform that we have crossed a milestone of achieving more than rupees 5,000 crore revenue for FY'25 for the first time in the history of the company. The revenue for FY'25 is rupees 5,093 crore, which is up by 12% as compared to rupees 4,544 crore in FY'24. This is on account of exceptionally good execution across all sites, especially in Q4 FY'25, where the revenue is rupees 1,612 crore. Further, the profit before tax and exceptional items has increased to rupees 477 crore as compared to rupees 319 crore in the previous year. The net profit is, however, lower at rupees 242 crore as compared to 264 crore in FY'24 due to exceptional items of rupees around 150 crore loss in current year, which is mainly due to on account of settlement of certain claims under Vivad Se Vishwas scheme. I attribute this success to all stakeholders and employees of Patel Engineering who have kept their belief in the management of the company. Just to give you all a glimpse of our operational achievements during the year. We have substantially completed the entire project of Tunnel T15 and part Tunnel T14. Successful speed trial runs have been conducted by the railways. Next, at our Parnai project site located in Jammu and Kashmir, the lining works for HRT have been completed for 2.5 kilometers. We also completed the barrage civil works and bridge along with the RCC frame structures of the powerhouse service bay, thus bringing us closer to the project's completion. At our Arun 3 project site in Nepal, the final breakthrough of the 9.5 meter dia HRT was completed and the heading excavation of total length of 8670 meter of HRT in the project has been completed. The lining of shaft and the civil works of unit number 2 of the powerhouse has also been completed. At Subansari project site, the final concreting for powerhouse unit number 4 has been completed. We also commenced the turbine floor concreting for unit 5 and all civil works of the water conductor system has been carried out. Out of the 8 units of 250 megawatt each, commissioning of 3 units is in final stage. At Kunda Pump Storage Line, we successfully achieved a breakthrough of the upper intake and headrace tunnel, along with completion of lining works for 900 meters of the 1,200 meters. Excavation of both the incline pressure shafts have also been completed. At our Kiru and Kwar hydropower projects located in J&K, we have been making significant progress and concreting activities are ongoing in full swing. At our Tunnel T7 project site, located in West Bengal and Sikkim, we have successfully completed the first kilometer of overlining work. Out of a total of 3 kilometers, 630 meters of lining works of the station cavern of total 650 meters has been completed. We have also achieved a substantial progress at our water tunnel project located in Mumbai and Raigad district, where in AMT2 project is nearing completion and PGRW and CITCO projects are in advanced stage of construction. Similar has been case with our Shongtong HE project and Tista HE project, where execution is at full swing in Q4 FY'25. Hence, overall, this quarter has seen good execution and the company expects to continue the momentum going forward. Moving on to our order book. As of March 31, 2025, our order book stands at rupees 15,217 crores, excluding L1, with 66% of that coming from hydropower, 23% from irrigation, 8% from tunneling, and the remaining from other sectors. This excludes projects of around 1,200 crores, which are L1, and projects of rupees 1,300 crores, which have been received recently in Q1 FY'26. So it is 15,217 plus 2,500, which is L1 or LOA received recently. So FY'25 order inflow was subdued due to elections. We managed to get projects worth of 550 crores during the year. However, FY'26 has started a positive note and we have received two projects. Number one, 1,318 crore for which LOA has also been received, which is for the construction of Kondane Dam located in Karjat, Maharashtra from CITCO, and the other 240 megawatt HEO hydropower project located in Arunachal Pradesh from NIPCO, for which we have been declared L1 as of now. The orders which were expected in FY'25 have been pushed by 1 year. Due to this push in ordering, we expect FY'26 revenues to remain stable, and with more projects worth of rupees 1 lakh crore expected to be available for bidding soon, we remain optimistic for FY'26 order inflow, and we should see better growth from FY'27 onwards, provided the geopolitical situation and other factors remain unchanged. Amid the rising tensions between India and Pakistan, and after the suspension of the Indus Water Treaty, the government is looking at fast-tracking the clearance of large hydropower projects. With the suspension of the treaty, the government will also look at accelerating work on existing projects and exploring ways to maximize its hydropower potential and improve the storage of water by constructing larger dams. The budget, which allocated INR 11.21 lakh crore to infrastructure, demonstrates a continued commitment to economic advancement by the government. India's economy is expected to expand by 6.5% in the current fiscal year, demonstrating its strength in navigating geopolitical challenges. On the hydropower front, we are set to enter an exciting phase, one which will witness rapid capacity expansion and high-value contracts coming up for bidding. All combined, there is a pipeline of more than 30 gigawatts between central PSUs like NHPC, SJVNL, NTPC, NIPCO, etc. NHPC alone has hydropower projects of around 4,000 megawatts, which are in advanced stage and currently awaiting clearances, and about another 5,500 megawatt projects which are at the survey and investigation stage. Further, SJVN also has projects of around 7,000 megawatts which are under survey and investigation stage. Apart from the developments in the hydropower space, the center is planning to invest around 10 lakh crores for the development of national highways over just the next 2 years. Under scheme like the Jal Jeevan Mission, the government has allocated around 67,000 crores for FY'26. Under the recent budget announced by the Maharashtra budget, there is a planned outlay of around 1,17,000 crores to be spent on various river interlinking schemes and improving the irrigation facilities at the state. In the tunneling sector, NHAI has plans to construct 78 tunnels covering a distance of 285 kilometers with an outflow of rupees 1.1 lakh crores. For PSPs, the CA has approved the DPRs for 6 PSPs in FY'25 and it is targeting to concur minimum of 13 PSPs of about 22 gigawatts during FY'26 and is targeting an installed capacity of 50 gigawatts by 2032. We expect at least around 30,000 megawatts of PSP projects to come up for bidding in the next 1 to 2 years between public and private sector. The prospect is immense across all sectors, presenting huge opportunity for our company. All the same would be subject to competition amongst the peers. In conclusion, we remain committed to sustainable growth and creating long-term value for all stakeholders. With a legacy of over 75 years, we are focused on executing projects with excellence and maintaining steady growth. Thank you, and I will now hand it over to Rahul to take you through the company's financial numbers.
Thank you, Kavita. Good evening, everyone. I will now take you through the company's financial performance for the quarter and the full year. On a consolidated basis, the revenues for the quarter is 1,612 crores, up by 20% year-on-year, driven by strong project execution. Operating EBITDA for the quarter is 218 crores, and the operating margin is at 13.55%. Profit after tax is 32.8 crores. On a standalone basis, revenue is 1,584 crores, an increase of 26% year-on-year. Operating EBITDA is 203 crores, with a EBITDA margin of 12.79%. Profit after tax is 36.6 crores. Sector-wise revenue breakup, hydro is 48%, irrigation is 37%, tunneling is 11%, roads and others are another 4%. On a full year basis, the revenue from operations is 5,093 crores, up by 12.09% compared to FY'24. Operating EBITDA is 733 crores as compared to 690 crores. EBITDA margin is 14.4% as compared to 15.19% in FY'24. Profit after tax is 242.1 crores compared to 264.1 crores in the previous year. On a standalone basis, revenue is 5,008 crores, up by 13.5% compared to 4,412 crores in FY'24. Operating EBITDA is 691 crores, up by 11.47% year-on-year. EBITDA margin is at 13.8%. Profit after tax is 259 crores compared to 288 crores in previous year. Coming to debt, so the consolidated gross debt is 1,600 crores compared to 1,886 crores at the end of FY'24. In this quarter, we have replaced some client advances of 70 crores with bank debt. Client advances as on March is 665 crores as compared to 760 crores at the end of the previous year. So total debt plus advances have reduced by around 378 crores in the year. The debt to equity ratio is around 0.42 compared to 0.6 in the previous year. In terms of breakdown of debt, the term debt out of the total debt is 601 crores and working capital debt is 1,000 crores. In working capital days, the net working capital after adjusting for stock of land arbitration awards is around 110 days. We would also like to inform that based on the financial performance, India Ratings and Research of Fitch Group company has assigned a credit rating of A- to the company. That concludes the financial overview. Now we will be happy to take questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, good evening. My question is this from Vivad to Vishwas, for which we have provided 150 crore. So what is the actual amount we would have received in this financial year?
This financial year, we have received around 350 crores from Vivad to Vishwas.
Okay. And the similar kind of provision we are expecting in FY'26 as well for this kind of settlement?
No. The scheme was only up to this year, so that scheme is over now. So we don't see any further thing coming for this.
Okay. So no accounting treatment will happen in FY'26 P&L from this, right?
No, this was exceptional one time this year.
Okay. And secondly, on employee cost, we have seen in this quarter it has increased 30% with 20% in the revenue growth. So, what is so much a spike we have seen on this, any specific reason?
No, there is no specific reason. If you see the overall year, it is only increase of around 8-9%. So year-on-year basis, the number is similar. It is only some costs would have come in this quarter because of some new hiring.
Okay. So, we should take, for next year, we should take a yearly number and then take a growth, not the quarterly number as a base. Right?
Yeah, the quarterly number can variate. You can better take a yearly number.
Okay. And also the cost, construction cost, gross profit has come down in this quarter. So, and this is also some mix or low margin order execution. What is the reason for that?
See, it depends upon what type of work has been executed during the quarter. So we always say that our average margins are between 13 to 14%.
Okay. So 13 to 14% kind of margin we will be maintaining on yearly basis. And this year we will be growing 5% or so in FY'26?
See, right now we are giving guidance of stable revenues because the order inflow which has started now will start yielding revenues from the next year onwards.
Okay. Okay, thank you. All the best.
Thank you. Before we take the next question, we would like to remind the participants to press star and one to ask a question. Ladies and gentlemen, the next question is from the line of Jainam Jain from ICICI Securities. Please go ahead.
Good evening, management. So my first question is, which are the specific tenders which in the hydro segment which you are looking that will be floated in this year itself and will be closed in this year, in FY'26?
There are multiple projects. So like NHPC, SJVNL, they are all coming. So this is mostly in the northeast, J&K and Himachal region. And the list of projects are there on their website, but namely projects are like Diban, then
Uri,
Tawalkot, Itanil. There are multiple of them.
Okay. And how many are we looking to add this year?
Our target is to, bid for around 40,000-50,000 crores, and our success ratio is generally between 15 to 20%.
Okay, so that amounts to roughly 10,000 crores. Right.
Yeah.
That's my question. Thank you so much.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
From your opening commentary, I couldn't catch one thing. So did you mention that there will be no growth in FY'26 because you couldn't get order inflow in FY'25?
Yeah,
That's all the reason.
Yeah, that's correct, because order inflow was subdued due to election. So 2025, if you see, our order inflow was around 500 crores. But FY'26 started with a positive note, and we got 2,000 crore of orders, where 1,300 crore we already got the LOA, and around 700 crores we are L1. So we are saying that considering our current order book, we expect FY'26 there will be a stable growth, and from FY'27 onwards, we expect around 10 to 15% growth.
So FY'26 stable growth means basically FY'26 will be flat revenues.
That's true.
Yeah. So
No?
we are giving guidance of flat revenue this year.
While we are endeavored to do the more, like last year also we surpassed the expectation. Last year our target was 10% and we achieved more than 10%.
Okay. My second question is this, in the sort of tricky again. So what kind of opportunities can open up there? What kind of projects are there? And when you mention 30,000 crore, 30,000 megawatt, obviously that's a number which you've been telling for past many quarters, and that doesn't include the sort of tricky again concepts. So what addition, what newer businesses can emerge from this? Opportunity can emerge from this?
See, basically the projects were always there. What we are saying is with this Indus water treating, thing suspended, now the projects will be expedited. So the project launch will be faster.
Okay. The 30,000 megawatt identified projects include some of the projects of that region?
Yeah, correct.
Okay. So it's just that now the 30,000 megawatt can be much more faster and visible than what it was earlier.
Yeah. So we expect the clearances for the start of those projects to come faster.
Okay. On the pump storage side, if you could tell us the scope of work that we have, and in the pump storage side, what is the scope of competition that we have to face? Because in the hydropower civil, there are limited players, totaling 5 or 6. How does it stack up in pump storage? Number one, and what is the scope of work that we have in a pump storage project?
So around 30 gigawatt projects were coming for bidding in near future, both from private and public sector. Like many private players also taken up the project, Adani, JSW and all. So we are also planning for bidding these kind of projects, which is around 10,000 crores. So we expect around 4 to 5,000 crore in this segment also. So it is similar to hydro. Competitors are also similar to hydro.
So you're saying in pump storage there are 30,000 megawatts for bidding, and in hydro also there are 30,000 megawatts for bidding, right?
Right.
Yeah.
And in pump storage, and you gave a 20% share. So what did you? So this 30,000 megawatt of hydro means what opportunity and what sale opportunity it is? This 30,000 megawatt.
So in terms of value,
Yeah.
based hydropower civil construction works is almost 5 crores per megawatt, and for pump storage it is between 3 to 4 crores per megawatt.
3 crores.
So basically 30,000 into 5 is 1,50,000 crore, and 30,000 into 3 or 4 is about, let's say, 100,000 crore.
Yeah.
Yeah,
So
correct.
that's the opportunity for the next 2 years, maybe 2 to 3 years.
Yeah.
Yeah, 3 years. Yeah. And what's your inflow target for 26, based on whatever you see?
We are first targeting that 10,000 crore order inflow.
Okay. Okay. Thank you, sir.
Thank you. Participants may press star and 1 to ask a question at this time. The next question is from the line of Rahil S. from Crown Capital. Please go ahead.
Yes. Hi, sir. Can you hear me?
Yeah.
Yeah. Hi. This exceptional losses that you have been booking, for the past 3 quarters, is it likely to continue in FY'26 as well? The ones you mentioned under some scheme?
No, the Vivad Se Vishwas scheme is over. So we don't see
Okay, so no more. Okay,
no.
okay, got it. Right. And the interest cost has also been reducing, and as you mentioned that your debt has been going down. So in FY26 also, can we expect it to go down by another 40-50 crores, the interest cost?
See, what will happen is we may have to take some client advances or working capital limits for the new projects which are coming in, although there will be some reductions of term debt this year. So we don't see the overall debt going up, but then the interest costs also may remain stable.
That is due to the advances that we'll be taking.
Right.
Okay. And lastly, so FY26 revenue is expected to be flat, and you'll obviously try to do more, but EBITDA margins, you said 13 to 14% is something you can maintain, right? Is there scope for improvement there?
Guidance-wise, we maintain like that only because there will be a lot of mix of the projects executed, and also 13 to 14% is we expect to get.
That's definitely doable. Oh, okay. Okay. Thank you and all the best.
Thank you. The next question is from the line of Viraj from Money Grow Assets. Please go ahead.
Hi, how are you? Congratulations on the financial consolidation. There's been such a big escalation in cost of materials consumed and more so in cost of construction. Can you comment on this?
See, overall, Viraj, so overall, the EBITDA margins are similar. It depends upon the mix of the work executed in the quarter.
Okay.
Otherwise, there's no major increase. If you see overall, EBITDA margins is still between 13 to 14.
Okay, so you're saying that may be a quarter-to-quarter anomaly.
Yeah, so it depends upon what kind of particular work was executed in this quarter.
Okay. Secondly, you mentioned about this exceptional item on the Vivad Se Vishwas. So you're saying the exceptional items impairment won't happen, yet our arbitration awards money can come in. That has nothing to do with Vivad Se Vishwas, correct?
That's correct. That's correct.
Okay. And then you also say these are loans and advances to subs and write-offs of receivables. Is that also complete? Have you written off all the receivables or bad receivables?
So
or is that likely to continue?
Vivad Se Vishwas settlement only.
Okay, so it's all that Vivad Se Vishwas amount itself.
Right, right. See,
Okay.
Maximum of it is in Vivad Se Vishwas only.
Okay. Understood. And previously, you all have guided to FY26 growth rate of 10% in the last call, which I specifically asked on the call, and said 27 onwards, you will do 15%. I think now you're talking about 26 being flat and 27 onwards kicking in because order intake was slower. But you already have a 15,000 crore order book, which is already being executed. And if you have the capacity and the order book, why can you still not deliver growth in 26?
So last year our expectation was 10%, but we surpassed the expectation. So we increase it is 13% almost. See, now we accelerated the execution of some of the projects and achieved that growth. Now considering order inflow subdued, which is 500 crores, we are saying ki we will be able to maintain around 5,000 crores. Also, there might be some growth, but right now we are giving the guidance of stable.
So Viraj, what happens is, see, with a 15,200 crore order book, and if we are doing 5,000 crores, so it gives us a book-to-bill ratio of 3. We used to have a book-to-bill ratio of 4 earlier, so we have expedited that. But then with existing order book, you can't execute more than that in 1 year because they will be at various stages. So that's why we are guiding that it will be kind of stable or flattish. Obviously, there will be new projects coming in, so we'll try to kick in as fast as possible for those projects. But conservatively, we're guiding for flat growth.
Understood. And lastly, any progress on the monetization of non-core parcels, including Electronic City or Tamil Nadu land or?
So Electronic City, this year we did one sale. We are in discussions for various other parcels also. Let's hope something materializes.
And the proceeds of that is going largely towards term loan pay down?
Right.
Okay. Great. Thank you very much. All the best.
Thank you. Participants may press star and one now to ask a question. The next question is from the line of Yash Matre from Cruise Capital. Please go ahead.
Hi, sir. My first question is, what is the potential funding requirement which you foresee given the bid pipeline?
See, generally we have to do mobilization expenses. So we fund it through working capital debt or client advances, which is between 5 to 10% of the project value.
Got it. Okay. And what are the funding options which you would consider for any growth opportunities?
So right now we are looking at client advances or the working capital debt.
Right. Okay. All right. Thank you. Thank you.
Thank you. The next question is from the line of Vivek Gupta from Star Investments. Please go ahead.
Hello, am I audible?
Yeah, Vivek.
Yeah. So firstly, congratulations on good set of numbers. I just wanted to know that, like, if you can provide a brief on some of the recent order wins and when they are expected to start showing up in the results going forward, like the projects wins from CIDCO for the Kondane Dam and the hydroelectric project from NIPCO.
So Kondane Dam, we have already received the LOA and we will start mobilizing the project. So generally a project takes around 6 months for mobilization, post which the revenues may start.
Okay, thank you. And the next question is, like, by how much amount do you intend to lower debt during the current financial year? Like, do you have any set of target in mind?
The term debt we see going down by around 200 crores, but then working capital debt may go up. Overall, we don't see the debt going up too much, to a very large extent.
Okay, thank you.
Thank you. Participants who wish to ask a question may press star and one now. The next question is from the line of Sonali Jain from SJ Investments. Please go ahead.
Hello.
Yeah.
Am I audible to you?
Yeah.
Yeah. So I have few questions for you. The first question is like, where do you foresee finance cost on an absolute basis, like over the next couple of years?
So finance cost, we are looking at being flat this year. Next year, we will be able to give more, guidance maybe after 1 or 2 quarters, depending upon what order inflow we are getting and how we are funding them.
Okay. And my second question would be like, what is the bid pipeline and are you expecting to benefit from any hydro-related projects from the suspension of the Indus Water Treaty?
The bid pipeline is large, so we are looking at least bidding of around 40,000-50,000 crores this year. And so with the suspension of the Indus Water Treaty, we expect that the projects which were expected to come up in that region will be expedited.
Okay. So like also given the recent volatile situation, as you know, on the borders, especially in the northern region of the India, so are you witnessing any challenges with respect to labor availability for the project execution?
So, if it elongates for a longer period, then that you will get some impact.
Okay. Thank you.
Thank you. Before we take the next question, participants who wish to ask a question may press star and one at this moment. The next question is from the line of Rajiv Rupani, an individual investor. Please go ahead.
Yes, thanks for the opportunity. Sir, I had a follow-up question on the land bank. So we have land bank in Bangalore, Panvel, Telangana and Tamil Nadu. So could you just give an update? What is the timeline to monetize the whole land bank? 1 year, 2 years, 3 years? Because we are selling the land bank in small parts. So what is the timeline to completely dispose of all the land bank?
So there are, out of all the land banks, we are identifying few land parcels which we want to sell first, which we will target to sell in the next 2-3 years.
Okay, so basically only part of the land bank will be sold in the next 2 years, not completely.
Not completely, correct.
Any particular reason?
So first we are targeting the land banks which we see that, can be sold immediately. There are few land parcels like Nagapattinam, which we see that the value will be enhanced if we wait for a couple of years, considering the development in the region around.
Okay, so what would be the total value of the land bank as of today?
It is between 800 to 1,000 crores.
Okay. And sir, I have a follow-up question on the pending arbitration claims. Last Concall, you had talked about 3,000 crore and the percentage in favor of companies 800 crores. So could you give an update on that?
Yeah, so there is no change on that. So we have around 750 crores of awarded claims and another 2,250 crores of which are under arbitration, getting into arbitration, so overall 3,000.
And when do you expect to receive the same, which are in our favor?
So the ones which are in our favor, that's challenged by the clients at various courts. So we see every year something or the other keep coming in from there. So that's why we have kept a target of non-core assets between land bank and awards. We get around 200 crores year on year.
Okay. I had one more question. Are we bidding for hydro projects in Bhutan?
We have not bidded yet. We may look into it.
Okay. And my last question is, 89% of the promoters holding its pledge. So when does this reduce or go to nil?
So now once the results are out, maybe this quarter or after one quarter, we'll start talking to the lenders.
Thank you.
Thank you. Before we take the next question, we would like to remind the participants to press star and 1 to ask a question. The next question is from the line of P. Jha, and retail investor. Please go ahead.
Thank you for taking my question. My two questions are, one, what capacity to execute order in the peak of our order book do we envisage? Whether because in the beginning and all along you maintained, rightly so, that the opportunity size is so big, and we being the leader in many areas, so the day is not very far when your order book would swell. Whether we have the capacity to execute twice the current turnover, or your view on that, first. Second is, now Vivad Se Vishwas scheme being over, so the arbitration award which is pending or which has been awarded, do we have any sense whether how long will it take for us realistically to receive order? Because you would have a fair sense if it is with the public sector or some not litigant entities, we may get it earlier even without the Vivad Se Vishwas scheme. So your comment on that. These two, the capacity and the arbitration awards, in your view, what is the likelihood of receiving?
So first I'll tell about capacity. See, we have almost 4,500 employees today, which were at 1,500 5 years back. And we have a gross block of around 1,100 crores. So capacity building keeps happening slowly. I cannot say that next year only we'll, can double the order revenue or something like that. So it will happen slowly. And it is not like a factory where, there is an installed capacity, you cannot increase and all that. So each project is a different setup altogether. So as in when you receive projects, you will hire more people, take more equipment and increase the capacity. So capacity building is not an issue. Pre-qualification wise, we have pre-qualification to bid for, n number of projects. So that is also not a problem. Coming to claim realization, so see, FY’25 scheme was one time this year we realized monies. Otherwise, the monies can be realized through courts or to submit against bank guarantees also. So those type of schemes are still there. So we'll keep evaluating and exploring whatever options are available and what could be the best way to realize the money.
Do we have any timeline for some of these awards coming our way? That is my, your estimate.
So timeline-wise, what we see is that, 200 crores is something what we should target every year to get money.
Wonderful. No, and the capacity I merely asked because in case if so much of order book which can possibly come our way, not in the distant future, are we ready to execute them? That is a limited question.
So our base is strong. See, as he mentioned that our employee base is 4,500 and our equipment base is also strong. Based on the project receipt, we can increase the team and increase the capacity for execution.
Great to hear that.
Yeah.
Yeah. That's my questions. Thank you.
Thank you. The next question is from the line of Rajiv Rupani, an individual investor. Please go ahead.
Yes, sir. I had a question on the orders on the tunneling side. So in the last one and a half year, we have not received any orders on that. So any update by when can we expect big orders on the tunnels?
For tunneling also, a lot of projects are expected. We will keep bidding and we will take projects when we will be able to achieve our required margins.
So we evaluate each and every project separately, and based on the viability of the project, we decide for bidding.
Thank you.
Thank you. Participants may press star and 1 to ask a question now. The next question is from the line of Preeti Agarwal from SKS Secure Associates. Please go ahead.
Yeah, thank you so much for the opportunity. My first question to you is, what is the reason for the significant decline in margins of Q4 FY'25?
So there is no specific reason. It depends upon the work executed during the quarter.
Okay.
So overall, it is between 13 to 14%.
Okay.
And profit is down only because of the exceptional losses. Otherwise, the profit before tax and exceptional is high.
Okay. All right. My second question is, how do you see the construction costs shaping up over the next few quarters or years? Do you foresee a higher cost that continue to impact the margin?
So on an average, we expect our EBITDA to remain in a 13 to 14 range, 13 to 14%.
Because as pass-through, if there is an escalation of cost, that is a pass-through for us. So that is why we don't see that the impact will come on us.
Okay. All right. Thank you so much.
Thank you. To ask a question, please press star and 1. The next question is from the line of Viraj Mahadevia from MoneyGrow Asset. Please go ahead.
Hi. Sorry, we've been mentioning a consistent margin guidance of 14-odd%, but should not operating leverage kick through in the years ahead, particularly FY'27 onwards, when we grow at a much higher revenue on a similar cost base?
So Viraj, what happens is when we have to increase the revenues, the employee base, the equipment base, everything has to grow. So that's why we say that the margins may remain in that. Obviously, we'll lose if we are able to do some, value analysis and save some cost. That can be better, but as guidance, we will still maintain 13 to 14.
Okay, thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Rahul Agarwal for closing comments.
Thank you all for attending this conference call. If any further questions are there, you can directly write to us or our IR agency, which is Orient Capital. Thank you.
Thank you.
Thank you. On behalf of Patel Engineering, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.